Checkout shares of Lyft falling in today's session as the first case of Omicron is reported here in the U.S. The stock is down more than 22% this year, and as new COVID headlines continue to come in, how will the outlook for the rideshare space be affected? Joining us now for a Fast Money exclusive interview is Lyft co-founder and president John Zimmer. John, thanks so much for joining us.
Thanks for having me.
Have you seen any changes in how people are booking their rides or the pace at which they're booking?
We have not seen any negative data around rides related to the new variant. And in fact, we remain extremely confident in our outlook for Q4, as well as going into next year, where we believe we'll have faster revenue growth in 22 than we did in 21. So no signs yet of any negative impacts.
What are the sorts of precautions or lockdown measures that you'll hear that will make you think, we could see a slowdown at that point? Is it going to be travel bans, even if it's international, because that limits airport business, restaurant shutdowns, or more, requirements for masks and vaccinations at restaurants? What sorts of things?
Yeah, absolutely. I think you named a lot of them. Talking about airport rides specific to Thanksgiving, this year we saw twice as many rides as we saw last Thanksgiving. So I think there is still a general trend towards people coming back, being safe. We now have the means to, we're requiring masks inside the car for driver and rider. More and more people are getting their vaccines. I think as we get more information about this variant, we'll have eyes open around those measures you talked about. But so far, that hasn't shown up in the data.
So, John, last quarter, Q3, when you guys reported, there was a lot of really important things coming out of the pandemic. You guys were onboarding more drivers, riders were coming back, the pricing was really stable. Is this something, again, I just heard what you had to say about Omicron. I think we're going to be moving back. Are these sorts of trends that you expect to really build in 2022 going forward, despite COVID?
We do. Yeah, as I said, I'm confident in both the outlook for Q4 as well as what we're going to see in the full calendar year next year. Of course, there'll be both reality and narratives that shift things and create volatility on a week-by-week basis. But overall, people are coming back, wanting to go out and finding safe ways to do so. But we'll keep looking and listening to make sure we're doing everything possible to keep drivers and riders safe.
When you look out to next year, John, what are you anticipating? What are you forecasting in terms of the cost to bring on new drivers, the cost to keep them, and your margins?
Yeah, so when we look at drivers, actually, one of the metrics we shared on our last earnings call, if you look from January to September over this year, our drivers returned 5 times faster than workers to the hospitality or retail sector. And so it's happening. The pandemic did affect labor across many industries, but we are seeing increasing return of drivers. Activation of drivers in Q3 was 60% greater year over year, and those trends have continued in a positive way.
So when you reported, I think it was November 2nd, we talked about it on the show. I thought it was a remarkable quarter. For all the metrics you just talked about, it was a record quarter in terms of rider profitability and those types of metrics. I thought the stock was easily headed north of $60. I think a lot of analysts did as well. Here we are at $38, and quite frankly, the stock has been a disappointment since the spring. I'm not looking to play stock market here, but when you look at what you're doing and then look at the stock price, does it make sense to you?
No. I think it's a big opportunity to get in right now at the value. We have, before it was expected, we hit adjusted EBITDA profitability in Q2. We grew that in Q3 in a market where we have 65% of the rides that we had prior to the pandemic happening. So we just massively improved the unit economics and the cost structure of our business. And that leverage is going to get better and better as we go. As we scale up and as we come out of the pandemic. And I am, as I've said, confident that both in Q4 we're going to hit our outlook, as well as next year have an even faster growing revenue year than we did this year. So it's we're fired up about what we're doing. We're excited about the numbers we're putting up on the board, and we feel confident that the stock will follow. It's hard to predict when, but we'll be patient and keep our heads down, grinding away on the business.
It's not often you get an executive saying that the stock price is too low. They often say, no comment there, John. So we appreciate your openness and your honesty there. John, great to see you. Thank you so much.
Thank you.
John Zimmer of Lyft. I don't know, Karen, would you agree?
Would I agree that we don't get very often someone to come on and say, yeah, it's a buy?
Is too low. It's an opportunity here.
It's interesting. Right. No, I like him, and it's not like it, there aren't a wildly overpromise, underdeliver. I would say the opposite, right? So that is interesting to me. I think that I don't own Uber or Lyft. I've always preferred Lyft to Uber, but I mean, they've done what they said they would do. That deserves something. So I think it's interesting. I would probably be a buyer here, but I don't own it currently.
Yeah. Tim, but it's with the uncertainty of Omicron and COVID in general, it's usually buy the rumor, sell the news, or in this case, sell the rumor and buy the news. So what do we do here?
Look, we've seen this playbook at various times for the last 2 years, but certainly just punctuated by stock action from the first round of COVID. So Omicron, and there's going to be something to follow it. These are buying opportunities. Lyft long term as a business. I mean, transportation as a service, rideshare isn't going anywhere. It's growing. The fact that the unit economics got better, and we've always said nothing like a good crisis to get a company to run better. And look, their active users, active riders were up 51% year over year. We know, obviously, getting to a normalized number is still some time away, but it's a question of when, not if. And a better run business. I think it's the big debate on Lyft versus Uber, not whether transportation and rideshare as a service is something that people are going to continue to pile into. It's a question of what's the better business model. And Uber fans are going to tell you they want that super app dynamic, and they think this company is going to be a much bigger platform. But Lyft is getting their business right, so that's impressive.
The stock is up by 1.5% now in the after-hour session. Dan, what do you like it here?
Yeah, I do. And I'll just say this. We were just talking about valuations. We were talking about some of these mega market caps. This has an $11.5 billion enterprise value. They have a ton of cash on their balance sheet. I think they're taking the steps to really focus on North American rideshare. And, we didn't even get to this deal that they announced with Argo AI and Ford over the summer, where they're going to be deploying, these autonomous fleets. And they're not in that business anymore, but that's a great partnership. And that's something that I think should be reflected in the value once they really start rolling that out in cities like Miami and Austin over the course of the year. So I just think I think it's a cheap stock, and I think they're doing some things right. And I think the trends, as Tim just said, will start benefiting them as we get past this virus in 2022.
So again, the Lyft CEO just telling us here on Fast Money that they're not seeing any impact on bookings from Omicron, and also the CEO thinks that the stock is cheap at these levels. The stock is up 2% on the back of that.